Hello everyone, welcome to this special pre-budget analysis session. I am Milan from Upstox and today we have with us Amit Goel, who is a CMT and a SEBI registered research analyst. Amit is going to share with us, insights on how to position, especially how do option traders position themselves before the budget and for the budget. Hi Amit.
Hello.
So Amit, tell us what has been the performance of Nifty and Bank Nifty historically on budget days.
Milan, thank you for having me. It's a pleasure always to be here on Upstox platform. Now, if I were to, what I have done is for this special session, I have done a simple analysis on the last 24 budget sessions, which essentially covers 20 years of budget data, including 4 interim budget days. Okay. तो अगर इसमें देखें, the way I have looked at is what has been the net change on the budget day, how has Nifty and Bank Nifty moved on the budget day, what has been the range for that movement, and post budget, once all the hula bula of budget is over, how has the market responded or reacted to the budget for, let's say, about a week from the budget day session. So it's a very interesting data point. Now, surprisingly, on the day of budget, both Nifty and Bank Nifty, which are our major indices, have had a flat to slightly negative close. So when I say close, it's basically net change on that day. उस दिन कितना change हुआ था? So the numbers are like Nifty has closed about 0.13% negative on the budget day, and Bank Nifty has closed flat at 0.01%. Now these are the median numbers. There are other ways to look at it. Like if you look at the averages, they are slightly more elevated on the downside, but then also because there have been some outlier moves of about 8% on Bank Nifty on the downside and about 6% on Nifty. This is in the year 2019, I believe. The net change, the insight here is budget days, the market has reacted slightly on the negative side. This is the first insight. Now, if I were to look at the range of the market of Nifty and Bank Nifty, this is a slightly more interesting data point. If you were to look at Nifty's range for the day, that is basically the high and the low, the range of the market. Nifty on an average has moved in the range of about 3% on the budget day, and Bank Nifty has moved about 4%. So while we are closing flat, the range has actually been elevated. Okay, there is another insight here. The downward movement, that is open to low, compared to the upward movement, which is open to high, we see that there is a clear bias on the downside. मतलब क्या होता है कि whenever the budget is being announced, especially during high data point, high sensitive data points like defense में कितना दिया और income tax related numbers, when those announcements come, you do see a very sharp reaction of the market, and that reaction, Milan, has been on the downside. So if I were to look at the downward movement on budget, it's been about 1.5 to 2% on Bank Nifty and about 1 to 1.25% on Nifty. So this is the muta-muti bias on the budget day, flat to negative closing with a wider range.
Okay, interesting. So Amit, in this context, how should an options trader position himself or herself for the budget day?
Yeah, so Milan, we have had 2 insights, right? Insight number 1, flat to a slightly negative close on the day. That's number 1. Second, we have had an elevated range of about 3% on Nifty and about 4% on Bank Nifty. Now, these are the 2 inferences which we have analyzed, inferred from the data of 24 budget sessions, which is a fair universe to speak of. Now, as an options trader, if I were to look at, trying to capture some bit of alpha here, one way I would do is try and play this from a mean reversion strategy. What is mean reversion? In simple terms, that that the range is about 3% on Nifty and 4% on Bank Nifty, right? With about 2% bias on the downside for Bank Nifty. मतलब Bank Nifty में 2% तक नीचे मोटा मोटी जाता है on a budget day, on a normalized basis. So, and about 1%, 1.5% on the upside. So if market does go, if Bank Nifty does go by about 2% on the upside or on the downside on the budget day, look for signs of reversal, maybe on a 5-minute, 15-minute time frame. See if there is any reversion happening there, right? And you play for mean reversion. That is, the market is likely to come back to the opening level. You would want to play for the mean reversion on either side. If it is on the top, right, and you see signs of reversal, you try and play for the bearish move. If the market has tanked by about 2.5% and we see signs of getting some support, we play a reversal for the upside. Obviously, the peaks on both the sides can be your stop losses, and we play this via credit spreads because on budgets we have always noticed that in the 20 instances of VIX getting recorded, because VIX was not there for 24 years prior. So whenever we have recorded VIX, out of 20 instances, barring the last budgets in July, VIX has always tended to cool off. So there is a marked and a very clear compression in the volatility, in the implied volatility. So you are playing for the theta decay, and if you are able to capture the direction intraday, because on a day close there is no clear direction, but intraday there is a clear mean reversion case to be made out. So you are playing a mean reversion with a contraction in IV. So this could be your trading setup.
Interesting. And Amit, is there any insight on post-budget moves?
Yeah, very interesting insights actually. So we have understood that on budget there has been a flat close with heightened intraday volatility. So the third insight was that VIX tends to contract. Now post budget, what has been the movement of the market, or how has the market reacted to all the announcements that are given out? Nifty and Bank Nifty both have a very clear bias, and the bias is upside. So
post budget.
So with the kind of market we are in, with the kind of fall that we have been experiencing in the market, hopefully post budget we should see some bit of relief coming into the market, given what data says for the last 24 budget sessions. Some numbers here, Milan, for our viewers. The median close on Nifty has been upwards of about 1% from the budget in about a week's time, with the highest being about 7%. But there is a disclaimer here that there have been some very sharp down moves also to the tune of nearly 6%. Okay, so after the budget also there have been some very sharp moves, outlier moves, but on an average it's been about 1% on the upside. So there is a clear bullish case to be made out given the data. Now let's look at Bank Nifty. Even Bank Nifty has had a similar performance of about 1.25%, 1.11% to be precise. This is also positive. So we have had a positive move on Bank Nifty and Nifty post budget in the next about a week's time. In Bank Nifty also we have had some very sharp outliers, close to about 9% on the upside and about 12.5% on the downside. So there is a element of outlier risk visible even after post budget. So the obvious question would be, how would we trade this, right? So we have understood that the bias is on the upside, there is VIX contraction with outlier moves on both the sides. So as an options trader, if I am looking for a directional bias, the bias clearly seems to be on the positive side with an upward movement of about 1%, 1.5% on Nifty and Bank Nifty. And there is a clear contraction in implied volatilities as indicated by VIX, right? So as an options trader, the strategies which benefit from a directional movement on the upside and a contraction in VIX are credit strategies. Now you would ask, what credit strategies could we play here? So the obvious strategy that comes to my mind is a bull put spread, which is a credit strategy which benefits a trader from contraction in VIX and an upward movement in the underlying instrument. If somebody is not very convinced about a clear upward bias but still wants to play for the upside, you could look at constructing a biased or a bullish biased iron butterfly or an iron condor, which are again credit strategies and benefit from contraction in VIX. I would not suggest any trader to trade via naked options, be it buying of options, because there is an element of Vega contraction, VIX contraction, which will hurt on account of theta decay. Second, trading via naked selling of options, be it call sell or put sell, entails a lot of tail risk, which we have seen as data presents that we have had some very sharp outlier moves. In order to protect from those kind of moves, doing it via spreads is the suggested way.
Thank you, Amit. This was an interesting data-backed, discussion. Thanks for it.
Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.